Welcome back to Talk Tickers, the show where we do a deep dive into earnings calls so you don't have to.
Right.
And today we are looking at Chubb, the insurance giant.
Yeah.
They just had their Q4 2024 earnings call,
And
and
a doozy.
it was doozy. They're reporting record profits,
Yeah.
but also a huge wildfire hit in California is going to have a big impact.
Huge impact.
So we're going to break down what really matters for you today from this earnings call.
Yeah. What's fascinating here is this contrast, right? You've got incredible financial performance,
Yeah.
yet this looming question of how sustainable that is, in the face of increasingly frequent and severe natural disasters.
Exactly. And they're dropping some pretty big hints about how the whole insurance landscape is changing.
Absolutely.
Buckle up.
Buckle up.
Okay, so record profits with a big old asterisk.
Yeah.
How are they managing to rake it in when the world seems to be throwing one disaster after another at them?
Well, they're not betting on just one horse, that's for sure. They're
Right.
seeing strong growth across the board. We're talking small businesses, super wealthy,
Yeah.
and a booming life insurance business in Asia, of all places.
Asia. That's interesting.
Yeah.
What's driving that surge, do you think?
It seems like a perfect storm of factors.
Yeah.
Rising middle class, increased awareness of financial planning,
Uh-huh.
and Chubb's aggressive expansion into the region. They've really tapped into a sweet spot there.
So Chubb is diversifying its portfolio and seeing global success. But what about the competition? Surely other insurance giants are eyeing the same opportunities.
Absolutely, you're right. And Chubb acknowledges that competition is heating up, particularly in areas like large property insurance
Yeah.
and financial lines, which includes things like D&O insurance.
So it's a crowded playing field, but Chubb seems confident. What's their secret weapon in this insurance arms race?
They're banking on their size, their data, and their techs. Chubb is essentially saying, look, we've got the resources and the brain power to weather any storm, literal or financial, better than the smaller guys. They're positioning themselves as the reliable choice in a world that feels increasingly unpredictable.
Makes sense. But let's talk about California, Doc. Chubb's CEO, Evan Greenberg, didn't hold back in his comments about the regulatory landscape there.
He certainly didn't have. Greenberg straight up blamed regulations for suppressing prices, creating what he called an unsustainable model. He's basically waving a red flag suggesting that Californians might be looking at premium hikes down the road.
Whoa, so Chubb's throwing some serious shade at California. What does that mean for their business strategy there? Are they going to pull back if things don't change?
That's the million-dollar question. It's a delicate balance. California is a huge market, but Chubb is clearly not afraid to flex their muscles and push back against regulations they see as unfavorable. It'll be interesting to see how this plays out.
Definitely something to watch. Now let's break down Chubb's performance a bit further, starting with their North American operations. What were the highlights there?
Well, in North America, excluding agriculture premiums went up by 6.3%. That was fueled by a 10% jump in personal insurance and a 5.1% increase in commercial lines. However, financial lines dipped a bit down by 2.9%.
So people are definitely prioritizing personal insurance, which makes sense given the economic uncertainty out there. But what's driving the growth on the commercial side?
Their major accounts and specialty divisions saw a 4.6% increase in premiums. Property and casualty lines led the charge there, up 5.8%. But again, financial lines took a hit, down 1.7%. Now, their middle market division tells a slightly different story. They had a healthy 6.2% premium growth overall, with property and casualty lines surging by 10%.
Okay.
But once again, financial lines dropped this time by 5%.
Okay, so a bit of a mixed bag in North America. Some areas are booming while others are facing headwinds. And that whole financial line slump is a recurring theme. What's the deal there?
It seems like increased competition is putting downward pressure on pricing in those financial lines. It's a reminder that even in a strong market, there are always pockets of intense competition.
Makes you wonder if Chubb will need to get creative to maintain their edge in those areas. Now let's shift gears and head overseas. How are their international operations performing?
Internationally, things are looking pretty rosy for Chubb. Their retail business saw a 7.7% increase in premiums,
Wow.
with commercial lines really taking the lead, up a solid 10.3%. Consumer lines showed more modest growth at 4.7%.
So the international market is hot for Chubb, especially on the commercial side. Any particular regions driving that growth?
Asia Pacific is the star performer, no surprise there, with a whopping 12.2% premium growth. Europe is also doing well, up 8.2%, with a notable 12% growth on the continent itself. Latin America had slower growth at 2.5%, but that's largely due to currency exchange rates. When you factor that out, they're actually seeing around 11.5% growth.
Wow, those are some impressive numbers. It really seems like Chubb is making smart moves in these international markets. But are they managing to keep their pricing power amidst all this growth?
That's the catch. While they're seeing strong growth, those pesky financial lines are facing a decline of over 6% in terms of pricing internationally. It's a tough balancing act to maintain profitability when competition is driving prices down in certain segments.
A global game of tug of war, it seems. Now, what about their London wholesale business? That segment has always been a bit of a wild card.
It's been relatively flat this time around, with premiums inching up just 1.1%, and they're seeing a 4% decline in prices as the London market gets even more competitive.
So not exactly fireworks in London, but
Yeah.
looking at the overall picture, are they managing to make decent profits internationally despite those pricing pressures?
Here's where Chubb's strategy really shines. Despite those headwinds, their overseas general business pulled off an impressive 86.4% combined ratio for the year. That basically means they're keeping their costs in check and generating healthy profits.
So even with the challenges, they're finding a way to make it work. Now let's talk about their reinsurance business. How did that segment perform?
Reinsurance had a stellar quarter with premium growth soaring by 20%. They ended the year with a 32% increase in premiums and a remarkably low combined ratio of 85.9%.
Wow, those are some eye-popping numbers. What's behind this reinsurance success story?
It seems like the reinsurance market is finally getting a dose of discipline both in property and certain casualty lines. Insurers are recognizing the need for adequate pricing and risk management, especially with all the global uncertainty we're facing.
It sounds like the industry is learning some hard lessons, and Chubb is capitalizing on that shift.
hmm
Now let's switch gears again and talk about their life insurance business. They've been pouring resources into that segment. How's it paying off?
Their international life insurance business, which is mainly focused in Asia, saw premiums and deposits skyrocket by over 26% in constant dollar terms. And their U.S. worksite business is also booming with growth of 17.8%.
So life insurance is another feather in Chubb's cap. What's driving this phenomenal growth?
It's a combination of things. Rising demand for life insurance and retirement products in Asia, their strategic expansion into new markets, and their savvy approach to distribution channels, they're really hitting all the right notes.
It seems like they've cracked the code for success in the life insurance arena. But how is all this growth translating into profits?
Their life division wrapped up the year with a pre-tax income of $1.1 billion, exceeding their own projections. It's clear that life insurance is becoming a major contributor to Chubb's overall earnings power.
Impressive stuff. It's like Chubb is firing on all cylinders with strong performance across the board. But as we discussed earlier, they're not immune to the challenges facing the insurance industry. Let's take a closer look at those challenges and how they're navigating them.
One of the biggest elephants in the room is the evolving risk landscape. Climate change is a prime example, with those California wildfires serving as a stark reminder of the increasing frequency and severity of natural disasters. These events are forcing insurers to rethink their risk models and pricing strategies.
It's not just about calculating risk anymore, it's about predicting the unpredictable. So how is Chubb adapting to this new reality where Mother Nature seems to be rewriting the rules?
They're fighting fire with, well, data. Chubb is leveraging its data analytics capabilities to better understand and model these climate-related risks. This allows them to price their policies more accurately and manage their exposures.
So they're trying to outsmart the storms with algorithms.
Eh.
But are they doing anything to encourage their customers to reduce their own risks? After all, an ounce of prevention is worth a pound of cure.
Absolutely. They're actively working with customers on risk mitigation strategies. For example, in areas prone to wildfires, they're encouraging homeowners to create defensible spaces around their properties to minimize potential damage.
That's a proactive approach, and it makes good business sense.
Hmm.
It's not just about paying out claims, it's about preventing them in the first place. Now let's talk about another challenge, competition. You mentioned earlier that certain segments are getting crowded. How is Chubb holding its own in this increasingly competitive market?
They're playing to their strengths. Chubb emphasizes its financial stability, its global reach, and its deep expertise in specialized areas. They're positioning themselves as the reliable, experienced choice in a sea of competitors.
So they're banking on their reputation and their track record. But what about their strategic outlook? What are their priorities for the future?
Chubb is laser-focused on a few key things: continuing to grow their core business lines, expanding into new markets, and investing in cutting-edge technology and innovation.
It sounds like a balanced approach. They're not abandoning their bread and butter, but they're also looking to the future and anticipating where the industry is headed. But what about acquisitions? Are they actively pursuing any M&A opportunities?
Chubb's CEO, Evan Greenberg, has stated that they're always on the lookout for potential acquisitions, but they're not in a rush. They're very selective, only pursuing deals that align with their long-term goals and create value for their shareholders.
A cautious yet opportunistic approach makes sense in this dynamic market.
Yeah.
Now let's talk about their capital management strategy. How are they returning value to their shareholders?
Let's shift gears one last time and zoom out from just Chubb. What can we learn from this earnings call about the bigger picture of the insurance industry and how it affects the economy as a whole?
It's easy to get lost in the numbers, but you're right, there are always broader trends at play. What are some of the key takeaways that go beyond just Chubb's bottom line?
Well, one thing that jumps out is the undeniable impact of climate risk. We've seen how those California wildfires hit Chubb's profits, and that's just one example. Climate change is a game changer for the entire insurance industry.
Yeah, it's a wake-up call for sure. Insurers can't just rely on historical data anymore. They need to adapt their risk models, pricing strategies, and even their underwriting practices to account for the increasing frequency and severity of climate-related events.
Absolutely. And this has ripple effects on the economy as a whole. As insurance premiums rise, it becomes more expensive for businesses and individuals to manage their risks. This can have a real impact on economic activity, especially in areas highly vulnerable to climate change.
It's a bit of a vicious cycle, isn't it?
Yeah.
Climate change leads to more losses, which drives up insurance premiums, which makes it harder for businesses and individuals to thrive in those climate-vulnerable areas. It's a challenge we need to address on multiple fronts.
Precisely. Another big takeaway from Chubb's call is the growing influence of technology in the insurance world. We've seen how Chubb is pouring resources into digital transformation, things like artificial intelligence, data analytics, and cloud computing. It's changing the game.
Yeah, it's amazing how technology is revolutionizing every aspect of the industry, from how policies are priced and underwritten to how claims are processed and settled. It's making things faster, more efficient, and more personalized.
It certainly is. And this trend is only going to accelerate in the coming years. As technology continues to evolve, insurers will be able to gather and analyze even more data, automate even more processes, and tailor their offerings to individual needs with even greater precision.
It's exciting, but it also creates challenges. Insurers that embrace these technological advancements will have a real advantage, but those who fall behind risk becoming dinosaurs.
Exactly. The insurance landscape is evolving, and those who adapt will survive. A third key takeaway from Chubb's call is the increasing importance of specialization. We talked about how Chubb is focusing on building deep expertise in niche markets like high net worth individuals, professional liability, cybersecurity, and accident and health insurance.
Makes sense. In a crowded market, specialization allows insurers to differentiate themselves, command higher premiums, and build stronger relationships with clients who need that specific expertise.
Exactly. It's about becoming the go-to expert in a particular area rather than trying to be a one-size-fits-all solution.
So to recap, Chubb's earnings call gives us a glimpse into the future of the insurance industry and its impact on the economy. Climate risk technology and specialization are three major forces shaping the landscape, creating both opportunities and challenges for insurers and consumers alike.
Well said. And remember, folks, staying informed about these trends is crucial for anyone making decisions about their insurance coverage, their investments, and their overall financial well-being.
Couldn't agree more. So as we wrap up this deep dive into Chubb's Q4 2024 earnings call, what's the key message our listeners should take away?
The insurance industry is evolving rapidly. Climate change, technological advancements, and shifting customer demands are pushing insurers to adapt and innovate. Those who embrace these changes will thrive, while those who cling to the old ways risk being left behind.
It's a dynamic and fascinating industry, and understanding these trends is key to navigating the future of risk. Thanks for joining us on this deep dive into Chubb's earnings call. We hope you found it insightful. And remember, if you want to dig even deeper, you can find all the details in the full transcript over at talktickers.com.
Until next time, stay informed, stay ahead of the curve, and stay profitable.